Chewy under pressure after reporting a loss of 21 cents and slightly better than expected revenue there. The share price moves all down significantly, as you can see. For more on the Chewy results, we're joined now by the CEO, Sumit Singh, in a first on CNBC interview. Thanks so much for joining us.
It's great to be here. Thank you.
So on the headline, 43% sales growth. Talk us through it and the quarter more widely.
Sorry, I couldn't hear that question very well. Say that again, please.
So on the headline, 43% sales growth was in line with what you were looking for, but a little bit disappointing on the bottom line.
Look, we're actually super excited about the results. 43% growth in sales, 40% growth in active customer base. If you look at our auto ship sales to our customers, 49% year over year. We're a growth mode company, and we're happy to be growing, happy to be bringing the best customer service to our customers, and happy to be here.
The 40% customer growth down a little bit, still very strong, of course, from the prior 45%. What's your forecast for where that goes from here, and how much has the slightly slowing growth been affected by Amazon being pretty aggressive in the space?
Yeah, two different parts to the question, Wilfred. So if you look at the customer base growing with us, I mean, we've added 3.5 million customers nearly year over year, which is pretty good. And then two, look at the United States, the U.S. pet health market. You've got 90 million customer households. We've got 12 million active customers on our file. So clearly you can see there's a lot of good momentum and a lot of good journey in front of us. You have to think of us as an experience-led company, not just a retailer of product and supplies. The experiences that we bring to our customers and the way that we build engagement and the way that they stick with us over long periods of time, that's how really our business model works, and that's really what makes us kind of super productive in the way that we engage with our customers. So a lot of good momentum in front of us.
So what would you tell investors who've been a little bit skeptical lately and continue to be so off the back of these results, who are worried that it's costing more and the growth rate is slowing ultimately?
I think I would say a couple of different things. First, I'd point out to the fact that we're playing in a very large market size, $70 billion. I'd also point out to the fact that it's early days for e-commerce, 14% penetrated. We believe this number could be 25, 30% over the next few years. I'd then point out to the fact that the solid value proposition that we're bringing to the table. I mean, if you look at our guidance, we're still guiding to grow about $1.3 billion year over year. And if you look at our profit, we are consistently showing deliberate incremental improvement in profit. And that's exactly what the investor community would want from us at this point. We've got a lot of growth in front of us, and we're capitalizing on our unique value proposition to be able to go get that growth.
I think I'm right in saying that Amazon was much more aggressive on a pricing point in June and July than they were in August and September. Did you see customer churn change based on how aggressive Amazon was being?
I think pricing in the e-commerce dynamic is just an industry trend that you have to kind of ride up and down. What really goes at the back of that is the choices that you're bringing to the customers and the experience that we're delivering. So for the most part, we're operating our business like we want to. We're executing to our strategy as we've laid it out. We are differentiating ourselves, bringing healthcare offerings, more diverse private branded offerings to our customers, and wowing them with the cool mechanisms that we have, that we've always had. And we're happy with that.
So, I mean, obviously, you're the biggest pure play pet care retailer. How much of that business is shifting online, and how fast do you see that switch happening?
It's shifting pretty rapidly. If you look at, if you go back 3 to 5 years, the online penetration was low single digits. Coming out of this year, it's probably, in the mid-teens. And, if the research is correct, and I believe it is, because we remain bullish on this index, over the next few years, you can see e-commerce penetration getting north of 25%, 30%. I mean, there are mature categories that are north of 40%. So e-commerce, when you just look at the proposition, I mean, who wants to lug heavy dog food bags from the store back home? And when you combine that, when you combine the scale and convenience of e-commerce along with a really superior customer experience that we bring to your doorstep, in a way, it's sort of the best of both worlds. And so we expect this to continue for long periods of time.
Where are people spending the most money on their pets right now?
Yeah, if you break down the industry across food and supplies, healthcare, and services, those are the three sort of verticals that connect. And 65% of the spend is on food and supplies. If you consider that to the customer that spend in how they spend on us, I'll just give you two numbers. On an average, I think the U.S. active pet spend per household on food and supplies is roughly $700-800, and our net sales per active customer coming out of Q2 was $352. So we're already capturing 50% of that share of wallet for our consumers. We're happy about that.
Sumit Singh, thank you very much. We'll spend anything on our pets and our babies.
Appreciate it.
CEO of Chewy.